Looking at the hottest stocks in the market can tell us where investors are focusing their attention right now. And no surprise, one of the biggest focuses is in artificial intelligence. That's driving a few of the stocks I'm going to talk about today. But let's get to the 4 stocks that are absolutely skyrocketing right now. I'm going to start with Broadcom. Shares of Broadcom are up 125% over the past year. And it's easy to see why the company is investing a lot in artificial intelligence and riding those tailwinds, with revenue up 20% in the most recent quarter. Their net income more than doubled, and artificial intelligence related revenue was up 46% in the quarter. What we learned during this earnings season is the spending spree in AI is going absolutely nowhere. And as one of the key suppliers in semiconductors and networking, Broadcom is going to ride those trends as long as it possibly can. We hit a point where the investment in artificial intelligence has just reached a cap. There's no more money that can continue to go out from even these big tech companies. They're spending almost all of their operating cash flow on capital expenditures now. We haven't reached that point yet. So at least for 2025 and looking forward to 2026, Broadcom looks very well positioned and the market is rewarding shares as a result. One of the reasons companies like Broadcom are increasing as much as they are, and this goes for most chip companies today, is demand from hyperscalers and companies like Oracle. Oracle wants to be one of the hyperscalers. They're involved in the Stargate project that OpenAI is building. And they have not been a huge growth company over the past decade, but they are trying to become that. And the market is buying into that story. You can see here that the revenue growth has started to pick up a bit, but their net income hasn't, as their capital expenditures have absolutely exploded. What makes Oracle unique in the hyperscaler space and building out these data centers is they're doing a lot of this building with debt. Unlike a lot of their big competitors like Alphabet, Microsoft, and even Meta, Oracle does not have a massive cash flow business. You can see that here, generating about $20 billion in cash flow from their operations. But they've spent a lot of the last decade buying back stock. So they only have about $11 billion in cash on hand and over $90 billion worth of debt. So as they're increasing this capital expenditures, that debt level may have to increase as well. So Oracle is the darling in artificial intelligence today, up a little over 100% in the past year. But don't overlook the fact that this is one of the riskier plays in artificial intelligence and with hyperscalers and data center builders because of that debt they have on the balance sheet. The third company that's on fire over the past year popped just this past week. That is Shopify. Shares are up 144%. And Shopify is just hitting on all cylinders right now. You can see that in their most recent quarter, quarterly revenue was up 31%. And the company has gotten over the issues that they had ending the pandemic, even said that they are not going to be highly impacted by tariffs, something that investors were worried about. But as a platform company that online retailers and more physical retailers are building their businesses on, Shopify continues to ride the wave of more digital transactions. Now, as always, this is not the cheapest stock. Shares trade for 71 times earnings. So there's high expectations for Shopify, but this is another company that continues to compound their revenue year after year after year, has been a phenomenal winner for investors. Stock number 4 may surprise you. That is GE Vernova. Shares of GE Vernova are up almost 300% over the past year as investors are looking for ways to invest in artificial intelligence without buying semiconductors, data centers. And the easiest way to do that is just simply buying the companies that are building the energy that those data centers need. GE Vernova is building natural gas plants, nuclear plants, wind energy plants, and as those energy demands increase, at least the theory is that GE Vernova is going to be one of the biggest beneficiaries. Now, we're not seeing that in the numbers quite yet. Performance obligations continue to rise for the company, but remaining equipment performance obligations only up about 19.4% over the past couple of years. And you can see here, the company is doing better than they were a few years ago, now generating a net income of $1.2 billion over the past year. But the price to earnings multiple for this energy company is over 150 today. Energy companies typically trade for relatively low price to earnings multiples of 10 to 25, depending on their growth rate. So there's a lot of expectations for growth in the future built in for GE Vernova. We will see if that actually plays out this year, next year, and really over the next decade as this AI build out continues to grow. But right now, investors are seeing GE Vernova as one of the biggest beneficiaries of the AI build out. So the 4 stocks that are absolutely on fire today: Broadcom, Oracle, Shopify, and GE Vernova. Which one of those are you going to be adding to your watch list? Let us know in the comments section below and give us your thoughts on these stocks. Your comments make us all smarter. If you're looking for the top 10 stocks to buy right now, check out fool.com/invest. And don't forget to subscribe here on YouTube. Thanks for watching, everybody. See you here next time.